All right, let's dive into Samsara's latest quarterly earnings, shall we? This is a company that's all about connecting physical operations, think trucks, factories, that kind of thing, to the cloud. And wow, they just dropped a seriously powerful report. It looks like it's being fueled by some major enterprise growth and a really smart AI strategy. So let's break down exactly what got investors so fired up.
And when I say fired up, I mean it. The market reacted instantly. The moment these results hit the wire, the stock shot up almost 10% in after-hours trading. I mean, that's a huge move. It's a crystal-clear signal that Wall Street absolutely loved what they saw. So, what was in that report? Let's get into it.
You know, the CEO, Sanjit Biswas, really hit the nail on the head with this one. He called it durable and efficient growth. Now, that might sound like corporate jargon, but it's actually the whole story right here. It means they're not just growing fast, they're growing smart. They're scaling up their revenue while also becoming more profitable. And let me tell you, that's the magic combination investors are always looking for.
Okay, let's get into the hard data. Time for a look at a stellar quarter by the numbers, and exactly how Samsara blew past what Wall Street was expecting.
Okay, so check this out. It's one thing to beat expectations, but this is something else. Revenue was strong for sure, over $391 million, which is a good 5% higher than the consensus. Nice. But the real showstopper? It's the earnings per share. The street was looking for 7 cents, Samsara delivered 12 cents. That's not just a beat, that is a 71% surprise. It just goes to show how incredibly profitable their operation is becoming.
So what's driving all this? It really comes down to ARR, annual recurring revenue. For any software as a service company, this is everything. It's the predictable, sticky revenue that comes in month after month. And Samsara's ARR just hit an incredible $1.64 billion. That's a 30% jump from this time last year. We're not talking about one-off sales here. This is solid, reliable growth.
But where is this growth really coming from? Well, more and more it's coming from the big fish. Take a look at this number, almost 2,800. That's how many customers are paying Samsara over $100,000 a year. And get this, just that group of customers now makes up almost $1 billion of their recurring revenue. They are successfully moving up market.
And it doesn't stop there. It gets even more impressive. In this quarter alone, Samsara added a record-breaking 17 new customers who are paying them over $1 million a year. Think about that. This top-tier elite group of clients now represents more than 20% of the company's entire recurring revenue. The takeaway here is undeniable. Their big bet on landing huge, complex enterprise deals, yeah, it's paying off big time.
So, that leads us to the big question. How are they pulling this off? Let's deconstruct the engine behind all this growth. It really boils down to two key things, their AI and their enterprise strategy.
And you can see that strategy playing out right here. This move to bigger customers is literally reshaping their business from the inside out. Those big clients, the ones spending over $100,000 a year, are now officially the majority. They make up 59% of Samsara's recurring revenue. This isn't just a side project. It has become the core of their entire growth story.
Okay, but what's the fuel for their AI? It's this absolutely staggering number, 20 trillion data points every single year. This data is coming from all their sensors and cameras out in the real world. You can't just go scrape this off the internet. It's their secret sauce, a treasure trove of information about physical operations that gives them a massive, protective moat that competitors just can't cross.
And they are absolutely putting that data to work. They just had their big customer conference and unveiled a whole lineup of new AI tools. We're talking stuff like AI Multicam that gives you a 360-degree video view, and a tool called Weather Intelligence that gives you hyper-local risk alerts. Every single one of these new features is designed to tackle a real tough problem their customers face every day, making their operations safer and a whole lot more efficient.
And here's where it gets really clever. They just announced something that's a total game changer, a partnership with Daimler Truck. Now, new trucks can roll off the factory line with Samsara's hardware pre-installed. Think about that. It removes a massive headache for customers. They don't have to worry about installation. This embeds Samsara right into the ecosystem, basically making them the easy, default option. That's how you build a powerful competitive advantage.
And just when you think they're done, they add this. They've brought in an absolute heavy hitter to their board, Gary Steele. If that name sounds familiar, it's because he was the CEO of Splunk. This guy is a legend when it comes to scaling enterprise software and using AI to make money from data. Bringing him on board isn't just a small move, it's a massive signal about how big Samsara plans to get. So after all that good news, what are they saying about the road ahead? Well, management isn't just confident, they're doubling down. They didn't just meet expectations, they actually raised their guidance for the whole year. That tells you they think this incredible momentum is here to stay.
So, here's what they're projecting. For the next quarter, Q3, they're expecting revenue to be right around the $400 million mark. But for the full year, they've bumped up their revenue forecast to over $1.57 billion and significantly boosted their earnings outlook. Again, this isn't just wishful thinking. This is confidence that comes from a team that knows it's firing on all cylinders.
All right, so let's put on our analyst hat. We've seen the numbers, we've seen the strategy. Now it's time for the final call. We're going to break down the rating and even explore a potential trade idea.
So let's just quickly recap the bull case, right? What are the biggest strengths here? You've got that insane data moat that no one else can touch. You've got them successfully cracking the enterprise market. The Daimler deal is a brilliant distribution channel. Their AI products are getting better and better, and now they have top-tier leadership on the board. I mean, you put all that together, and it's a pretty compelling story.
Okay, so putting it all together, our rating here at Talk Tickers is outperform. The thesis is pretty straightforward, their execution has been fantastic, they're a clear leader in AI for this space, and the enterprise momentum is real. All that justifies paying a premium for the stock. Now, what are the risks? You always have to watch the broader economy, right? A big slowdown could hurt. And when you're chasing huge enterprise deals, the timing can be a little lumpy. Those are the things to keep an eye on.
So that brings us to the next call, a potential trade idea based on this bullish outlook. The thinking here is that maybe, just maybe, the market still doesn't fully get what Samsara could become long-term. And if that's true, there could be a really interesting opportunity. The specific idea here is a long call spread, buying a call at the $50 strike and selling one at $65, both for September 2026.
And really, that trade idea boils down to this one big question. Is Samsara actually an underappreciated AI infrastructure company for the physical world? The bet here is on what's called a re-rating. Right now, a lot of investors might just see them as a company that connects trucks and equipment. But the argument is they're becoming something much bigger. With that data moat and their AI chops, they could be seen as a core, foundational AI company for the entire physical economy. And if that shift in thinking happens, well, the stock could have a long, long way to run. And that's our breakdown of a very, very impressive quarter from Samsara. Now, just a quick and important reminder, this is not financial advice. All of this content is for informational purposes only, so please always make sure to do your own research.